Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A higher opening third bullish white soldier on Friday, opening at the lower end of the congestion between 101.55 to 103.34, dating from August 2014, of all places. The dipping down through a clear zone down and below the November 2022 high at 99.61, the 50% Fibonacci line for the 22 to 25 move at 98.75, and down to the September 23 low at 97.68, before rallying back up to close back within the August 2014 congestion, just over the bright pink neckline, which is currently at 103.01 of the March to April 2024 head and shoulders top pattern. Please pay attention to that one. Above, we have a relatively clear area until the August 22 high at 105.49, and congestion between 106.79 to 107.46, and again between 108.27 to 108.62. To be honest, none of these previously mentioned resistances look that great in this market, and instead I look to the dark blue neckline extension of the July to November head and shoulders top, currently at 113.75, and of course the bright red neckline above, currently at 119.93 of the 2020 to 2025 bullish shift pitchfork. Now, so far today, a gapping higher open, and that's the third week the market has done that, and it's over the August 22 high at 105.49, but just under the further congestion from 2014 at 106.79, before dropping down to the congestion zone below and just on the bright pink neckline extension, and it's almost unchanged. Spot gold. A third bearish black crow on Friday, making the lowest close for 3 weeks and finishing both the low of the day and the close just above the important and key 50% Fibonacci line for the whole late January action at 49.99. Further below, we have another 50% Fibonacci line, the one for the late December 25 to late January 26 move at 49.31, as well as the rising green short medium moving average, currently 49.12. Importantly, this was a second consecutive close below the bright green early February to mid-March small bull channel. It's currently 51.79 to 55.83, and thus I will downgrade this next time. I'll also downgrade the bright red February based ascending triangle pattern and retire its topside targets of a primary target X at 54.40 and a secondary hard to reach target X1 at 55.80. However, the dominant longer term pattern and showrunner here still remains. It is the dark blue late December 25 to early February 26 bullish shift pitchfork, with the market a little under the dark blue middle time, which is currently at 51.79. So far today, a further dip below the 50% Fibonacci line at 49.99, but a swift retracement back up to unchanged from the open right now. Bitcoin. A seventh bullish white soldier and follow on to the previous session's hanging man pattern, an earlier shooting star pattern, type 2 bullish. The base of the action was on the 50% Fibonacci line, November 22 to October 25 move at 17.929, with prices pushing up through the next resistance, a lesser Fibonacci line at 72.023, but failing at testing the next congestion, and that's made up from the March 24 high and April 25 low at 73.779 and 74.444 respectively. The overall pattern here is a dark blue early February to date bull channel, currently 65.278 to 75.074. That is not really in question. What is in question is whether this is a potential halfway hesitation for a much lower market, or a potential basing action for higher prices. You should note that we are now well clear of the potential, the bright green upper time, currently at 67,183, of what at one stage had been the potential showrunner for the recent moves, a bright green early October 25 to mid-January 26 bearish Andrews pitchfork. I'll downgrade this pitchfork next time prior to retirement. Additionally, we still have in the big picture, just about hanging on, a very large October 25 to date bearish halfway hesitation. Now the primary target and secondary targets of this pattern have already been achieved, leaving just a much harder to reach tertiary target X2 down in the 54,000 zone. I am having serious doubts as to whether we will reach target X2, and I'll likely retire it once we have somehow neutered the idea of a bearish halfway hesitation. Now so far today, further move higher into the 73,779 to 74,444 congestion overhead and towards the dark blue upper bull channel line. But it's been failing there and coming back to sit back just below and just around that congestion.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.